I became a funded trader inside of 2 trades using this very simple model, and inside of this video I'm going to show you guys exactly how I did it. This strategy always starts off on the higher time frame. We first want to be looking at our market structure. The market is either moving one of 3 ways. We are either in an uptrend or a downtrend, or we are moving sideways. Right here I have gold. We are obviously moving in an uptrend where we are making higher highs and higher lows every single time, kind of like a wave moving up. We always want to look at our market structure on the 4-hour or the daily time frame. This is because the flow of money usually starts on the higher time frames, because a lot of the bigger players usually place their positions looking at the higher time frames. Now that we have our higher time frame bias, we can go to the lower time frame, such as the 15-minute and also the 1-hour, and look for supply and demand zone. Here I have a zone marked off. This is on the 4-hour. You can also use the 4-hour as well for your supply and demand zones. This zone is important because first it has a gap right here, and it also broke structure as well before price came back to tap into the zone right here. So after I have my demand zone marked off, I'm mainly looking for demand zones because like I said, we are bullish on the higher time frame. After that, I'm then looking for areas of liquidity. So when we're talking about liquidity, the type of liquidity I like to look at is time-based liquidity. When we're talking about time-based liquidity, 2 important ones are session-based liquidity and also previous day lows and previous day high. These are important because at the beginning of London session or at the beginning of New York session, price likes to take out liquidity and then go in the opposite direction that it wants to go for the day. So applying this concept, mainly we trade New York, but you can use this same framework and see this same thing play out during London as well. Make sure that you do go up to indicators and then type in your sessions indicator 2. Have all your sessions popped off. Here, abiding by this, we have our Asian session right here. There's liquidity above the highs and the lows. And then we also have our London session right here where we have liquidity above the highs and the lows. At 7 o'clock on gold, New York session opens up immediately. Since we are trading demand and we want to see more buying, we want to see price take out the liquidity below, tap into our zone, and then move higher. At 7 o'clock, we see that happen completely. Now we are just waiting entry confirmation so we can get inside this trade and aim for higher. This candlestick right here would have been the break of candlestick that we would have been waiting for. We would have gotten in right here. Stop loss goes right below this candlestick, and we are aiming for London high or Asia high as well. We get inside this trade, price immediately goes higher and aims for that area of liquidity after tapping into our zone, taking out both the lows and then all of that. This is the simple model, and this is how it plays out a lot of times. You always don't have to wait for London low to be taken out. If there's a supply or demand zone and let's say London low is not taken out yet, you can still get inside of this trade and target higher areas of liquidity. Here's another example for you guys. This is another trade that I had taken. So on the higher time frames, gold was obviously moving bullish. So after looking at the higher time frames, we then go to the lower time frames and look for areas of supply and demand. Right here is a demand area. This demand area is significant because it has a gap. We also broke structure above this point before price comes back to the zone and then goes higher. After that, we go to our lower time frames and we're just looking for session-based liquidity. We have Asia right here, and we also have London. Almost 7:30, so we want to see that sweep coming back to the zone and then moving higher. At 7:30, we see exactly that. On this specific day, I more so would have gotten in on the 5-minute. You can either get in on the 5-minute or the 15-minute. It all depends on what you like. 5-minute entry, aiming for higher, would have caught a whole 1 to 3 off this move. This is another example of my model playing out. Now, if you guys want to take your trading to the next level and work with me one-on-one, I do have Secret Traders University with a 7-day free trial. So if you guys don't like it, you can always leave as well. And full money back guarantee with literally no risk at all. There's also our one-on-one mentorship that I do have and do run. It says $2,000, but it is custom made towards you and what you are going through. So the real price isn't $2,000 per person. So if you want to work with me and want to take trades and take your trading to the next level, then the link is inside of the description. You can also hop on a Calendly call with me and see what's the best option for you as well if you want to work with me. Now, this is the last example we're going to do, and this one is for all of my London traders. So everybody who trades London, this one is for you. So first, we go on the higher time frames. See that price is obviously bullish. We're moving side of an uptrend. And go lower time frames. We see our demand zone on the 1 hour right here. Broke above structure, which was right over here. And then we see it come back to the zone. We then are looking for session-based liquidity, but this is London, and for London we're just looking for Asia high and also Asia low and watching what it's doing. We're also already inside of the demand zone right now, so something really cool happens here. We don't take out Asia low, we just start going higher. Now with this, you still would be able to get inside this trade. You don't have to wait for Asia low to be taken out. Just look at where the draw liquidity most likely would be at, which is Asia high. We get inside this trade, and then price does not take out Asia high, but we do get a nice run from price, and this would have given us at least a 1 to 4. Honestly, for me, once I hit a 1 to 3, I'm taking partials, moving to break even. All that matters is that I got the draw and liquidity right, even if it didn't take out Asia high completely. So here's a way you still would have been able to make money without being fully right. So this right here is my SDL model, fully explained, and everything like that happens every single day. You could either trade it London or New York, or you could trade it during both if you want to. Just make sure that you wait to look at where liquidity is going and your supply and demand zone as well. This model does have a little bit less trade frequency, so we would only be getting 1 to 2 trades a week or 1 trade a week some weeks. But overall, as traders, less is more inside of the markets always, so you have to take what you can get with that as well. If you want a higher trade frequency, a lot of the times you'll have a lower win rate, but lower trade frequency, higher win rate. So just see what you like, test it out for yourself, and then execute it inside of the markets. So that's all I have for you guys for this video. I hope you guys enjoyed it. Comment down below for future videos you want me to make, and I'll get back to you. That's it, and I'll see you guys next time.